Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
What's that old saying? Is history doesn't repeat itself, but it rhymes? Something like that. Anyway, welcome, everybody. It is the Watchdog on Wall Street. You're always honored to be in front of the microphone here. And, a lot of correspondence this week with new listeners to the program. People heard the show the first time. And, again, it's one of these programs, you often don't forget when you first heard the show. We pride ourselves on opening up people's eyes into how the world works, how Wall Street works. We defy conventional wisdom, the crap that's constantly being thrown at investors all the time. I want to talk about the volatility, I want to call it that, the volatility in the markets over the past week. Lots of stock photography out there. Lots of stock photography up on the myriad of websites, business websites, with traders holding their heads, looking disgruntled. Oh my God, the sky is going to fall. The world is going to end. My longtime listeners know. Again, we've been on the air for 20 plus years. That's what this radio show. Been in business a hell of a lot longer than that. No matter what the situation is, no matter what the crisis du jour is, we don't change. We do not deviate. And that's why we're successful. It was fascinating this past week. A gentleman you're familiar with, big-time investor, famous investor, Stanley Druckenmiller. Stanley Druckenmiller, he was interviewed, and he said that the stock market is in a mania fueled by the Federal Reserve and investor speculation that's going to end badly in the coming years. Everybody loves a party, but inevitably, after a big party, there's a hangover. Right now, we are in an absolute raging mania. We've got commentators encouraging companies to do stock splits. Companies then going up 50, 30, 40% on stock splits. That brings no value, but the stocks go up. Stanley must be listening to the program, because sounds like a watchdog on Wall Street echo chamber. Yeah. It's going to end badly for many people out there. It is. There's a lot of junk out there, people. There's a lot. There's a lot of companies that are really priced too high. But let me tell you something. I don't know when they're going to come down to earth. I don't. Neither does Stanley. Let me remember the famous or infamous speech by Alan Greenspan, where he talked about the markets going through the roof. Remember the irrational exuberance speech? Does anybody remember what year that was? I do. 1996. 1996. Alan Greenspan was talking about the stock market getting out ahead of itself. It took 4 years. 4 years before what he said became a reality. Now, again, Alan Greenspan, he didn't help matters much. He could have taken the proverbial punch bowl away before things got a little bit too far out of control. Many investors out there buying stock on margin, .com companies, worthless companies, buying it on margin, leveraged up. We have similar situations today with ETFs, but the same type of thing is happening. Again, I'm not saying this is the 1990s by any stretch of the imagination, but it rhymes. It rhymes. The late 1990s was a very difficult period of time for Markowski Investments. Why? Why was it a difficult time? Well, we were honest. We were honest. We were cautious. We were telling people to take profits off the table and rotate those assets into companies that were priced with much better value. Oh, Markowski, you know what you're talking about. It's a new economy. It's a new paradigm, man. Earnings don't matter anymore. All these .com companies keep coming up. I got to go take my money to Stewart at Ameritrade. Uh-huh. How'd that work out for you? How did that work out for you? How many people listening to this program right now have basement bathrooms wallpapered with stock certificates that are worthless from the 1990s? How many? Again, people, the reality is that if you think that cycles are over and that value doesn't matter and earnings do not matter, you're wrong. They do. They do matter. Eventually. Eventually do. You can go back, you take a look at our career and what we've done here and the warnings that we put out. Another big one back from the 1990s was our call on Enron and how we were scratching our heads and we didn't get it. I didn't get it. I don't know why this company is the most innovative company in the country for 5 years straight. I don't even know what they do. Trading bandwidth. Yeah, we warned people about it in 1999. Took a while, but again, things will come back down to earth. This is basic stuff, okay? Benjamin Graham, how every single asset class has an intrinsic value. Sometimes it's below, sometimes it's above. All of it. All of it. I recounted the story this past week. Thinking back, my eldest son is in his last year of high school. It's back to school week, kinda this week at the Markowski household. They're only going back to school 2 days a week. Don't even get me started on that. But this is when my son had to be, 4 years old. 4 years old. And I had a lot more time back then because kids were younger. Wasn't chasing them around as much with sports. Where I was playing competitive lacrosse. Old guy competitive lacrosse. I guess as competitive as can be for old guys. And I'm up playing a game, and I meet with a banker friend of mine who was also playing. A guy was in the mortgage business, and he's telling me where I live. This is when I lived in Southwest Florida. He's like, you know that where you live is the hottest real estate market in the entire country? Really? Really? I do a little bit more digging. I know real estate prices are going through the roof, but I actually take a much closer look, and I see houses that were for sale a year ago are now being sold for more than twice what they were. And I'm like, where was the value created here? I mean, I'm trying to figure it out. Did they put in all Sub-Zero appliances and upgrade the house? No. Is there a lack of homes or a lack of space to build homes? No. So where's the value? There isn't any. I watch people rush out and buy pre-construction condos. I watch people go out and buy half-an-acre lots 40 minutes away from the Gulf of Mexico for $500,000 in a cow pasture. And I would jump up and down. I'd get on the Ritz radio show warning people, don't take money out of your 401ks. Don't buy into this real estate nonsense. This is a bubble. Oh, Markowski, you don't know what you're talking about. God doesn't make any more real estate, you know. Don't you know that guy that's on Yahoo Finance, that Kurioski guy, is talking about real estate all the time? You don't know anything, Markowski. Oh, I don't, do I? See, I told you so moments here on the program. I'm going to be honest with you, they don't bring me any joy because when we turn out to be right, people lose a hell of a lot of money. Everything in life that has meaning, value, and worth, we say this almost every week here on the program, involves work, time, and effort. Our process here in identifying value at taking profits in areas and parts of your portfolio that go up is what we do. And the funny thing is, we're not arrogant about it. You don't hear me coming out and saying, you know what? I'm definitely right on this and blow out of entire positions. Let me give you an example of this. We've got a position. We'll call it XYZ. XYZ is a leader in its field. It's a tech company, a leader in what it does. And the company has raced through the roof over the past several months. And this is a position that's in many of our portfolios. I think it's overpriced based upon the money that it's making. I do. So what do? Do I say, sell, Mortimer, sell, time to get out? Well, kind of, but not really. What do I mean by that? Well, if that position in the portfolio has gotten out ahead of itself, guess what? We'll take some money off the table. We'll trim that position and rotate those assets, those profits, somewhere else. Sometimes to cash, sometimes to an area of the portfolio that we feel is undervalued. This is how it's done. This is how it works. You don't try to guess. Again, irrational exuberance. Was Alan Greenspan right in 1996? Yeah, he was, but he was early. He was early. Now, again, I don't see the sheer volume of worthless companies that are trading like I did back during the 1990s. I see some, but not nearly as many. So yes, again, it's different but same. The one thing that remains constant is how you go about managing your money. Taking profits, rotating assets, looking for value, finding companies that pay dividends, compounding the safest yields you can find over time. This is what works. All the stuff that you're hearing, all the stuff, you're on your television, oh my God, the market's doing this, they're up this, or there. What's going to happen next? It's static. It's static. Don't pay attention to it. Prepare your finances properly. Understand the terrain. That is what will make you successful. Take a quick break. You're listening again to the Watchdog on Wall Street show, and we're always here to help. Get to our website, all sorts of great things there. As always, we're here to help you. Consultations with our certified financial planners are free. And no, you don't need to have a $10 million portfolio to speak to one of us. You don't. We're here to help everyone. So sign up at our website, watchdogonwallstreet.com. That's watchdogonwallstreet.com. We also have our 24-hour day help hotline, 800-471-5984. That's 800-471-5984. We'll be back.
You should believe in math, not magic. You're listening to The Watchdog on Wall Street with Chris Markowski.
We keep it simple here because it is. But sometimes simplicity is just not easy. That makes sense, right? Real simple. You want to get yourself in shape. You want to lose weight. It's not the recipe, how to go about doing it. It's not difficult. It's simple, just not easy. That's the thing about Wall Street. We explain again and again and again. They like to try to confuse and bewilder you, make you think that they've got some sort of magic algorithm or they're just smarter than everybody else and you need to listen to them and all of their wisdom. And they're all full of crap. They are. About 14, 15 years ago, let's put out some simple rules of the road. 4 simple rules that anybody, if you adhere to it, you're going to be successful. Not a matter of if, just a matter of when. Simple things. Compounding, the royal road to riches. It's true. Compounding is the royal road to riches. Play with the compounding calculator sometime. It's magic. Another simple rule. Don't lose money. Don't lose money. Another one. Invest like a multimillionaire or a billionaire. Hey, you got all those stories. We'll get into this a little bit later on in the program about, oh my God, did you see how much Jeff Bezos lost today? Really? Do you think Jeff Bezos was sweating at all? Think he was getting nervous? No. And of course, buy assets on sale. Now, again, these are simple rules. They are. And we try to get across here that it's not important. It's really not important to be right in the here and now. It's important to be right eventually. In other words, what conventional wisdom says is the greatest investment, the greatest idea today is more often than not a lousy investment or idea. Markets are not efficient over the short term. They're not. Many of the major calls that we've made over the years, regards to market conditions, the economy, various companies, were contrarian at the time. But we were proven right over time. This means that one of the most important attributes one needs to have to be successful is what? Patience. Another one, quite frankly, is courage. Guess what? Some things are just not going to go your way. Some things at a certain point, they're just not going to go your way. And you need to stand in front of that. You need to have courage in the face of all the wizards of smart and the chattering classes on TV and all the people at the golf club or the country club or the yacht club or wherever you hang out. Oh, yeah. Yeah, I remember that. It was big during the 1990s. Oh, my God, my buddies are making a fortune. All these TikToks and put the golf course are telling me this stuff. And I said, well, I don't golf, but, yeah, it's not going to end well. Yeah. And again, you think about when there's sell-offs, whether it be the Great Recession, whether it be the pandemic of 2020. How many people do you know out there that just sold everything? People that acted out of fear and made very poor choices. Courage involves thorough consideration of all the facts. You keep emotion out of the decision-making process. You know what the reality is that human beings, they're not hardwired to be good investors. Human beings buy high and sell low because they let emotions take over much too easily. Get a little bit further into this when we get back. Watchdog on wallstreet.com. Again, Count Repair Kits, consultations with our certified financial planners, all sorts of great stuff there at our site, Watchdog on wallstreet.com. We'll be back.
Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
No. The things we do here at Markowski Investments, the things that we've been teaching people for decades at our firm, on the radio show here, they're not sexy. They're not sexy. Not at all. Remember Serge from Beverly Hills Cop when he's making fun of his coworker? You're at the art gallery? What is this, for a dog to scrub? It's not sexy. It's not sexy. Markowski, your financial process, it's not sexy. No, you're right. It's not. It's not. But it works. I've written a lot about this. People look at stocks. They're not a part of a video game. They're not. I don't look at stocks. I don't look at what I do. These are not blips on a screen. Now, in today's day and age, I get it. You watch some of this stuff and the way sometimes things behave. Again, this is due to high-frequency traders and the Robin Hood crowd out there and all the other charlatans and how they've adversely affected the marketplace. When I buy a company, when I put a company into one of my clients' portfolios, you are an owner. You're an owner in that company. The price of that stock and the overall value of the company, you evaluate that based upon the money the company makes, what industry the company is in, and what the expectations are for the future. When you go about evaluating risk, it's okay. It's okay you can love risk. I don't mind risk at all, as long as risk doesn't lead to ruin. You understand what you don't want? There's a line. It's by Nicholas Taleb. He said, in a strategy that entails ruin, benefits never offset risks of ruin. Rationality is avoidance of systemic ruin. Last week here on the program, I talked extensively about how I really don't like the term financial plan. I'm a financial planner. I'm a financial planner. All the time, all the commercials out there. Again, how does one exactly plan for decades of uncertainty? How does one really know? How does one know that date when you're going to want to retire? Huh? When you might want to change careers, start a new business, find a spouse, have kids. What we do here is a process where, and as we're here to help you adapt to the unknown, the unknowable terrain of life. for over 2 decades here on this program, and even longer in our newsletter. We tried. I try hard. You week in, week out, show after show, warning people about financial scams, all the charlatans that are out there, the poison of conventional wisdom. Hey guys, it's not just in my area of business. It's not just in finance, economics. It's everywhere. The importance of reading a story, picking up a newspaper, a magazine, watching some 24-hour news program, and recognizing that you're being sold the narratives, the self-destructive strategies that are being pushed upon you. We've talked about the watchdog on Wall Street, axis of evil, big business, politicians, the media. We take great pride in recognizing and exposing narratives, hidden agendas. And we're here to help you prepare. I mentioned this before, and I've written about it again. It was the television show that I was a big fan of. It was called Friday Night Lights. And again, near and dear to my heart because I still do it. One of my favorite jobs that I still participate in is I'm a coach. And trying to lead kids, teach kids. And it's about this coach in a small town in Texas high school football team where football just rules. And there was a line that the football coach used in it. It always stuck with me. And it's truth and simplicity. Clear eyes, full hearts, can't lose. See the world, the terrain, the obstacles for what they are. Not what you wish they are, or what somebody is telling you that they are. Accept the challenges. Embrace the challenges. You embrace them wholeheartedly, you can't lose. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com. Become a part of the Watchdog on Wall Street family. Don't go anywhere. We'll be back.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
Welcome back, everybody. It is the Watchdog on Wall Street show. My home is we're at the top of a pretty steep. I can't if I was because we have snow here, obviously in Long Island from time to time. It's not as bad as it is in upstate New York, but I would talk to the snow blower people. I was going to get a snow blower, and even the ones with like the tank. It's too steep. So if gets the snows above about 4 or 5 inches, I have to have a guy come and plow it. It's just too difficult. The kids and I can't do it. And it's a pretty high driveway. So when it's garbage day, it's always a battle with my kids. I did it last time. Why do I got to do it? And I was thinking about it, and I was thinking about the scene. Was teasing my youngest son from Coming to America, where Akeem is talking to Mr. McDowell, and he goes, "When you think of garbage, think of Akeem." And I was teasing my youngest son about that, and I kind of said, "Geez, when you think of garbage, you might want to think of Chris Markowski, the watchdog on Wall Street." Why? Because we take out the garbage all the time. All the time. All the things that we report on, the garbage companies that we're able to identify. And I was actually thinking long and hard about it this past week. It was, various different companies out there and tech companies that are extraordinarily overvalued, and how long I've been at it. And back in the 1990s where I would get stacks. Hey, one prospectus after another, some .com company, some tech company. It wouldn't take me long. Wouldn't take me long to look through and say garbage, 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 garbage. But again, the people didn't care. The higher-ups didn't care. They knew that they were garbage. Didn't matter to them. Didn't matter to them. They were going to still sell it to the public. And it's another one of the reasons why I left. I left the whole investment banking world. I can't do that. I can't sell garbage product. And again, it's kind of a disconnect, and it's something that most Americans, quite frankly, they just don't understand. They don't understand who they're doing business with. It's Wall Street. They will take your money. They will sell you anything as long as you're willing to buy. And it was quite the lesson, to say the least. I'll get a little bit further into this and explain myself in greater detail. Don't go anywhere. Watchdog on wallstreet.com. Watchdog on wallstreet.com. Our newsletter, consultations with our certified financial planners, all sorts of great stuff at the site. Watchdog on wallstreet.com. We'll be back.
This is the Watchdog on Wall Street.
One of the things I truly enjoy, it's another aspect of my job in our business at Markowski Investments and the Watchdog on Wall Street radio show, is clients will come to us, they'll come to me, and then they want to start a business. They've got a business plan, and they want me to take a look at it, and they want me to I tell them what I think. And I do. And sometimes I'll tell people that, hey, this is just way too much of a risk and the numbers don't add up to me. And other times I'm like, wow, this is a great plan. This looks like a great deal. And I've been doing this for a long time. I'll walk into a business. I'll walk, for example, I'll walk into a restaurant and my mind starts working. I'm calculating the space. I'm calculating what they're spending in heat and how much their air conditioning bill is going to be and the staffing costs and what they're charging on the menu. And I'll say to my wife, I'll be like, yeah, this place is going out of business. She's like, what do you mean? It's packed. I'm like, no. Trust me. It's going out of business. And that's something I've always been able to do. My problem, one of the problems I have with how Wall Street works, and I've explained this before here on the program, is that most of the firms out there, they're publicly traded. And their job is to make as much money for the shareholders and make the stock price go up. And obviously the way the world is structured today, the people at the top make a fortune in stock options. That's how they get paid. And that's how they become millionaires 100 times plus over. They're not getting it in salary. But that's obviously a disconnect, right? Because I have to put in my business, I'm not publicly traded. I will never be a publicly traded entity because you can't serve two masters. You can't. My clients' concerns come first. I was thinking about the scene this past week in the fantastic film Margin Call. And in the film, it's during a kind of fictional, quasi-fictional movie during the financial crisis, an investment bank that has got a ton of garbage securities on their books, mortgage-backed securities, figures out that, guess what? Things are going to get bad really quick. And how they have got to get out. They've got to sell. They got to get rid of all of this crap that they own that they know is worthless. And one of the characters in the movie tells the CEO, I said, we're going to ruin the market. We're going to be selling something we know is worthless. And the CEO is like, no. We're selling it to willing buyers at the fair market price. I remember conversations like that in my younger days working on Wall Street. I couldn't do it. I couldn't take some ridiculous .com company and put my clients in it and tell people that it was wonderful and great when I knew it was dog crap. And again, the people, well, what are you talking about? What do you care? It doesn't matter. You don't understand. It's what the people want. And it's I guess maybe it's the same type of, moral justification that drug dealers, we're selling drugs to, they want the drugs. We're just providing them the drugs. You're killing them, right? I couldn't do it. I couldn't do it. But again, I'm able to see it's changed. It's changed from the 1990s to today, when back in the 1990s, they would just take a company public, and oftentimes, some would work, some wouldn't. Tons of them out there. Many of them went bankrupt. Nowadays, it's a little bit different. To me, it's much more sinister today. These venture capital firms in Wall Street, they create a brand. They create a brand that you believe in, that you'll trust, and they do it over years. They incubate, and actually call them, they incubate these companies, these brands for years. Companies know. Who cares if the company's going to ever make money? They don't. The goal is to get you to buy it. There was a line that was used by a journalist by the name of Christopher Byron. I don't know whatever happened to him. Christopher Byron, back during the 1990s, talked about the greater fools. And that's what Wall Street thinks of you. They make their money, and they want you to own it last. You are going to be the greater fool. Hey, if the company makes it for the long term, fantastic. More often than not, it doesn't. It doesn't. And they know that. They know exactly what they're doing. And the thing that I find fascinating, is that, been talking about this, been explaining this, been writing about this for years. And to this day, I'll have people that will call us up, send us an email. After, again, they've been listening to this program. They've been getting my newsletter for years. They know what we've been talking about, what we've warning about. And all of a sudden, 10 years down the line, they're like, you were right. What do you mean I was right? Yeah, I got royally screwed over by, big firm one, big firm. It didn't make any difference. It happens all the time. All the time. And I'm like, well, why didn't you figure this out earlier? How could you not figure this out earlier? How many different ways can I present this to you? Well, there's a nice guy. He took me golfing and out to dinner, and really? People, again, no shortcuts in life, no quick fixes, no magic algorithms, none of that stuff the big firm has. They're lying to you. Get your finances in order. Get on board with our process. Watchdog on WallStreet.com. Watchdog on WallStreet.com. We'll be back.
You're listening to the Watchdog on Wall Street. Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the Watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
Yes, it is. Welcome back, everybody, to the one, the only, the Watchdog on Wall Street show. I was thinking about it during the break. We're talking about looking at companies and value and how I go about understanding what's real and what's not real. And I was reminded, there was actually a scene in the television show Billions. I think I shared this here on the program in the past or maybe the podcast. Oh, as I digress. Podcast. Yeah, every day. Every day. No narratives, no nonsense. What's important? I try to keep it around a half an hour. Absolutely free. Sign up for it at our website, watchdogonwallstreet.com. You can get it everywhere. Okay? Just letting you know. But anyway, there was a scene in the television show Billions where the guru hedge fund guy is, he's kind of, he gives it to his wife. His wife at the time was trying to start up this business. I think the business, if I remember correctly, was going around and giving people IVs, like a mobile IV company to Wall Streeters and business people out there that they may have had too much to drink the night before. Now, again, this business it exists. I think they do it in Las Vegas. I see various different places out there that administer these things. So there wasn't really anything unique. And the character tells his wife, he says, well, what is it that you do that you're the best in the world at? You offer a service you didn't invent, a formula you didn't invent, a delivery method you didn't invent. Nothing about what you do is patentable or a unique user experience. You haven't identified an isolated market segment. Haven't truly branded your concept. You want me to go on? So why would an investment bank put serious money into it? I all but told you ahead of time, but you wouldn't listen. Now you heard it, but it's too late. You weren't ready. And his wife wasn't too thrilled after he served up the cold truth. Hero on the show, and he's got a lot of bad traits, without a doubt. But he's honest. He's honest. I say that right here. I tell my clients. I said, if you're looking for us to sugarcoat things, we don't do that. We don't do that. I'm going to tell you what we think. Isn't that what you hired me for? What, you want me to lie to you? Oftentimes, people, you can phrase things in a certain way, right? What do they call that? What, the poop sandwich? You say something nice, you deliver the poop, and then you say something nice again. Yeah, they've mentioned that to me in coaches' clinics, whatever it may be. I'm a little bit old school. There's no spoonful of sugar to make the medicine go down here on the program. I'm not Mary Poppins. Anyway, moving on. I want to talk about this. This is becoming very, very popular right now with the kids. Yeah, this is popular with the kids. Yeah, I mean the millennials out there. And I continue to hear this being pushed. And it makes me nervous. The idea of a wealth tax. What you say is a wealth tax, Markowski. Think of a property tax. There's another thing I can't stand. Property taxes. Yeah, you got to pay for services and schools and all, and fire department. I get that. I understand that. But I don't think property taxes is the right way to do it. I think sales taxes are certainly much better. And I've explained why I can't stand property taxes. Property taxes, they're awful because guess what? You never own your own property. Never, ever, 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 ever will you own your own property. If you stop paying your property taxes, the government takes your property. So technically you don't own it. You are basically, you're a serf. We're all serfs. Are we not? Am I wrong here? You don't kick up to the man. They take your property. That's why I can't stand property taxes. But anyway, a wealth tax is kind of like a property tax. And a lot of the kiddos out there, even Biden has been alluding to this. The Bernie Sanders, Elizabeth Warren train, where they want to come in every single year and take a look at what you own. Not just your property, but your portfolio, your artwork, if you own a boat, if you own cars, what is it worth? And they want to tax you on that. That, my friends, is a wealth tax. You know, I found it funny. I did. I found it funny. You know how you get a lot of the Hollywood types talking about how unfair everything is and how we need to share and all. And they're getting on board all this stuff. And I learned something this past week. I was going for a jog and I'm listening to Rogan's podcast. Listen to Joe Rogan's podcast I listen to from time to time, and depending on who he has on. And I'm a fan of the actor Rob Lowe. I like from when I was a kid. I think he's funny, and he's really engaging, and I like his story. And he said something there, and I looked it up. He was right. He was talking about how 99% of members of the Screen Actors Guild, that's the union. These are people that have a SAG union card. They've actually acted in something, whether it be a play or a television show or a movie, whatever it may be. They got their SAG card. 99% of them cannot make a living acting, or in production, whatever they do. And I'm saying to myself, what? 99%? 99%? And I'm saying to myself, well, why do all these actors that love all of this good stuff, they love all of this, share the wealth, why don't they run their own? Why doesn't the Screen Actors Guild run it in a socialist, communist type of manner? Why do all the top actors just say, hey, you know what? I'm going to take, I'm making $20 million a movie. You know what? I'm going to make it $100,000, and I'm going to give the rest to all of the members of the union that can't make a living off this. I mean, think about it. They push all this stuff all the time. Well, why don't you guys put your proverbial money where your mouth is? Yeah. And again, when we talk about taxes, when we talk about wealth taxes, and it's funny, they've been tried. They've been tried in places around the globe, and basically what happens is this. For every dollar that has been raised, every dollar that has been raised by the wealth tax, that government has lost $2. Lost $2. Whether it be, various different citizens saying, I'm moving now. I'm moving. No, I'm not going to live in this country anymore. They up and go. So for every dollar that they've collected, they lose $2. And it reminded me of something. I don't know. I found it fascinating. It's like, well, you know how you get those epiphanies, or you get struck by a thunderbolt when somebody says something? I'll never forget. I'm watching the Democratic debate between Barack Obama and Hillary Clinton. And Charlie Gibson asked a question of Barack Obama, and Barack Obama at that time was talking about raising the capital gains tax. It's just, again, oh boy, lefties are all for that, right? But Charlie Gibson presents and said, well, you want to raise the capital gains tax there, Senator Obama. When Bill Clinton lowered the capital gains tax, the revenue to the Treasury went up. And again, obviously, it looks like Charlie Gibson was kind of going to bat for Hillary Clinton in that debate. And Barack Obama comes out, kind of matter of factly, it's not about revenues, it's about fairness. Yeah, we got a real problem in our society where we're trying to tear people down based upon the fact that they're doing well. Again, trust me, there's a lot of crooks out there. There are. And we talk about them all the time. I don't like at all, and I've discussed this. I don't like at all the way corporate executives are paid with stock options and stock buybacks. And we've talked about all that. And these are common sense things that we can deal with. I get that. There's areas that we can deal with. But going after people because they've done well, looking to tear them down, how does that benefit society? How does it benefit society? Is that going to make people that haven't gotten to that level, it's going to make you feel better? Is that going to make you feel better? And again, it reminded me of the Kurt Vonnegut short story there. Was it Hares and Bergeron? Where society is, we got to keep everybody equal. Everybody loves that phrase. That's equality. People have got bumper stickers with equality. People have got tattoos, I see it, with the equal sign. What does that mean? What does that mean? You might be better at me at many things. I don't hate you for that. It is what it is. Everybody has unique talents and abilities. We're not equal. The only equality that we're supposed to have is we are supposed to be equal under the law. Now we can debate that. We can debate that, and we technically we're not. You take a look at the justice system. You can take a look at the tax code. Yeah, there's a myriad of things that we can deal with. But we're supposed to be equal under the law. That's it. That's it. I'm not gonna be a matinee idol. Okay, I'm not Brad Pitt. That's just the reality. To use the tax code and to pit people against one another based upon this and what they have, it's shameful. It really is. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Again, our newsletter, consultations with our certified financial planners, all sorts of fantastic stuff at our website. Take advantage. Watchdog on WallStreet.com. Our 24-hour day help hotline, 800-471-5984. We'll be back.
The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
Great tune, Neil Crosby, Stills, and Nash. Welcome back, everybody. It is the Watchdog on Wall Street show. Hey, I want to talk a little bit again. I know I've touched on this here. My concerns about the Fed and what's going on. How many people get the feeling out there that the Federal Reserve and the United States Treasury have almost merged? It's almost like a strategic merger. Yeah, it creeps me out too. It creeps me out too. But then I look around the globe. I look around the globe and I say, oh my God, look at that. Look at Greece just borrowed money at 0%, pretty much. And again, does that make any sense? No. No, it doesn't make any sense. The Congress right now is working on, we got another stimulus package. What is this stimulus package? What's part 3? First, you had the Democrats. They want another $3 trillion plus. And then the Republicans came back. It was like 1.5, 1.7 trillion. I don't remember exactly. And now they have another one, which is smaller. And actually, there's 20 Republicans in the Senate that don't even want that. They're like, enough's enough. Stop. Just stop. The only thing that I really like in this next stimulus package, and it doesn't cost a damn thing, is to give protection for businesses, for schools, nonprofits, whatever it may be, from liability. So the tort attorney doesn't come banging down their door when somebody says, I got COVID in his store. I went to eat at the restaurant there, and I got COVID. And I got the sniffles. Really? Really? How do you know you got it at that restaurant? You know for certain? Did some magical test come out where you know exactly at the point in time where you got COVID? No. You don't know. You don't know. And that's why these businesses need to be protected. They need to feel safe. They want to be able to open up and get back to work. But anyway, again, the system is based upon belief. Belief. And it's also access. I'm a big fan of Judy Shelton. I don't know whether or not she's going to be confirmed to the Federal Reserve, but she should be. It's funny how you get all the wizards of smart, all the powers that be that are coming out against her because she thinks differently. Meanwhile, you got one of the heads of the Fed, they got Neil Kashkari, involved with the bailout of the financial companies back in 2008, 2009. Nobody gets in any sort of trouble whatsoever. What is he? He's the head of the Minneapolis Fed. And he's like, you know what? We should shut the entire country down for the next 6 weeks. And he's on the Federal Reserve Board. Moron! But Judy Shelton thinks a little bit differently. No. She put out a piece years ago talking about the Soviet banking system in ours. And her point is that capitalism depends on access to capital. And how, and this is going back 8 years ago, and how banks have gotten away from the task of directing assets, lending to people, seeding companies. What do they do now? They create assets out of thin air. They bet on interest rates. Oh, it's a profitable business, but again, it's problematic. It is. And she talks about Lenin. She said Vladimir Lenin, had been wise about the use of banks. Shortly before the October Revolution, he wrote, without big banks, socialism would be impossible. The big banks are the state apparatus which we need to bring about socialism, and which we take ready-made from capitalism. Think about that for a second. What do we have now? Are not our big financial institutions somewhat socialist? They're too big to fail, right? They're too big to fail. Oh, we can't get rid of them. It's going to be too terrible for U.S. financial stability. As mandatory members of the Federal Reserve System, they are partners for conducting monetary policy through the purchase and sale of Treasury bonds, which are orchestrated by the central bank, Federal Open Market Operations. Besides serving as conduits of Fed policy for expanding or contracting the money supply through Treasury debt transactions, commercial banks can also access short-term funding directly from the Fed through the discount window. And again, you take a look at our nation's budget deficit, which is, it's over $3 trillion this year, right? $3 trillion. So guess what? The central bank has continued to finance government activity. Let me ask you a question. Where do you think this money is better spent? Huh? You think it's better going to the government, or do you think it's better in the hands of individual Americans that will go out there and build and create? It's not getting there. It's not getting there. It's something I lamented for a very, very long period of time. This is something that is a key. We want to have a financial recovery. You want a V-shaped recovery, not this stock market V-shaped recovery. You need to get capital into the hands of entrepreneurs.
So you think you could tell?
WatchdogOnWallStreet.com, WatchdogOnWallStreet.com. Just getting warmed up here on the program. But I do want to remind everybody, again, take advantage. Become a part of the Watchdog on Wall Street family. WatchDogOnWallStreet.com is our site, our 24-hour day help hotline, 800-471-5984.
Chris Markowski is the Watchdog on Wall Street. You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
Yeah, I'm gonna get some nasty emails and Facebook posts and all that good stuff after this next segment. I can almost guarantee it. Yeah, and it's unfortunate because again, people don't like to see the forest for the trees and think very clearly. Believe it or not, during the entire, this is back in June, many of the protests that were taking place and that all of a sudden newfound interest in the Juneteenth holiday, which, again, I have no problem paying attention to that. He marked the emancipation of the last slaves in the United States. But guess what? People started putting money, they started investing based upon color. I'm not kidding. You actually saw certain black-owned businesses skyrocket. The shares in those companies skyrocketed. And again, they came right back down to earth, and a bunch of people lost a fortune. I'm sorry. I'm sorry. You don't invest based upon skin color. If you're doing that, you're going to fail. You're going to fail. Just as much as you're going to fail as a business if you hire based upon skin color. I hire based upon who's qualified. He, she, doesn't matter. What color, I could give a damn. I told this story. This actually happened. I can't remember the year exactly. It was during the Obama administration. I'm working in my office, and I get a phone call. I actually showed it was from the Labor Department. So why the hell's the Labor Department calling me? And this lady starts asking me questions about the makeup of our staff and how many minorities I had working at our company. I don't know. What's a minority? I don't even know. I don't even think in those terms. Don't even think in that way. I don't put labels on people. And I got ticked off, and I kind of yelled at her, and I said, you know what, I'm darker than Obama in the summertime because I do get pretty tan, and I hung up. I never heard from them since. I guess that might have been stupid. I could have gotten myself in trouble. But again, anything you're doing stuff based upon skin color, I'm sorry. It's wrong. It's wrong. And I'm sorry, you can argue with me all you want. I don't think that's, what Martin Luther King was talking about. I'm a big believer in judging people's character and not the color of their skin. But anyway, moving on. I mentioned this earlier on in the program. I've talked about this in the past, and we talked about taxation and how we're taxed here in this country. And I've also talked about how people are paid and the problem that we're having here in this country with executives, CEOs, many of whom I think, quite frankly, are incompetent. Many of them are just managers. That's all. They're not deep thinkers. They're not entrepreneurs. They haven't come up with ideas. And I've explained this is why so many mergers and acquisitions fail. They were destined to fail. The executives on Wall Street understand that they can boost the ego of some CEO and convince he or she to go ahead and do this big merger and acquisition because it'll make them like a conquering hero. Because they know deep down inside that, again, they're just nothing more than a manager that managed to weasel their way to the top. Now, I have concerns about the stock market moving forward for a myriad of different reasons. Talk about the Fed printing all of this money and maybe some of the ridiculous valuations that we have today. But it's a little bit more than that. I do believe that it's going to be more difficult for us. I think we're going to see muted stock market returns moving forward because, it's a herd mentality that has taken place in corporate America. We got a lot of companies out there that quite frankly are zombies, walking dead. They're not companies that are growing. They're companies that are still in business for the wrong reasons, many of them, whether it be regulatory capture, incestuous management, horrible boards of directors. And again, I don't think this is healthy by any stretch. Now, this all got started back during the 1990s where they were having, pay reform. Again, it's part of Congress. And rather than paying salaries, we started paying people in stock. And things got out of control quickly. I'm going to talk a little bit more about this when we get back. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com can become a part of our family, the Watchdog on Wall Street family newsletter, podcast, consultations with our certified financial planners, all sorts of great stuff. WatchdogOnWallStreet.com. We'll be back.
Try to run, try to hide, break on through to the
Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
Yeah, I'm a bit of a nerd. I admit it. In my gym, when I'm working out, I have documentaries playing. I do. I I listen to things. I kind of quasi watch, have documentaries playing in the background, and I decided to put on Oliver Stone's The Untold History of the United States. And I know many of my listeners are like, left-wing lunatic. I listen. Whoa. Yeah, he's a left-wing guy. And there's no doubt about it. He can't call it The Untold History of the United States because Oliver Stone is pitching his narrative, and he is, without a doubt, a socialist. However, many of the things that he did discuss in the documentary when it came to foreign policy, I happen to agree with wholeheartedly. Even some of the things that he talked about when it came to corporate America. His solutions, however, again, wrong. Sometimes people listen to this program and they get the wrong idea. Am I a radical? I'm thinking of that. What's that song by Supertramp, the Logical song? I'm a bit of a radical, but I'm a capitalist radical. What does that mean? Whenever something goes wrong, or there's some sort of injustice, and we have plenty of them. People, the media, the socialists, the communists, which are very prevalent in our society today, that's out in the open. We all know this. They blame it on capitalism. And that, quite frankly, it drives me crazy. It does. Capitalism. Well, you think too big to fail is capitalism? No. Too big to fail is socialism. That's what that is. And I talked about, remember Occupy Wall Street and how people were upset, kids were upset about the bailouts and what took place, and rightfully so. Rightfully so. Did any of the crooks do any jail time? Anybody lose their job? No. They just got much bigger bonuses. I live in an area on Long Island, not far from where I live, are these enormous mansions. Enormous mansions. And they're the old Lehman Brothers executives. They still live there. Well, I think, Dick Fold from Lehman Brothers, what did he walk away with? $500 million? $500 million. And this happens all the time. Happens all the time. Whether it be with Boeing, it doesn't make any difference. Management and directors pocketing hundreds of millions of dollars. Is that capitalism? I don't think so. We'll talk a little bit more about it when we get back. Watchdog on WallStreet.com. Watchdog on WallStreet.com. We shall return.
You're listening to the Watchdog on Wall Street. Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
I had written this down a while ago. This is when, all of the, again, it seems like a long, long time ago, but it really wasn't. All the issues were going on with Boeing, and they still have their issues, and how management and directors at Boeing pocketed, about $5.5 billion in exercise stock options. Exercise stock options and also restricted stock units while building a flawed company. Yeah. And then what happens? What happens next? Oh, XYZ company, Boeing. Would it make a difference? We are going to do a stock buyback. So essentially, they buy back the stock from these executives. Again, I don't like it at all. I have to deal with it. As a money manager, that's the terrain. This is what I have to deal with. How do you fix this? How do you fix this? And again, this is where it's unfortunate, where you can get some sort of compromise between the left and the right. You can. And it's unfortunate that they can't meet on this. We need to get rid of all stock-based compensation for directors of companies. That's right. No, you're not getting any stock. No, you work for Boeing. You want to own Boeing stock? Buy it. Not at a discount. You buy it at the market price. Directors of companies cannot get stock options. The average delay workers at these companies, I have no problem with it. You want to put some stock into their 401ks, into their retirement accounts? I don't care. Just don't overload it. Cash only. You should get paid cash. The same way, what was the quarterback there, Mahomes from the Kansas City Chiefs, he got some contract, some ungodly sum of money. It's cash he's getting from ownership. That's how he's getting paid. That's how executives should be paid. And in the interim, because you already offered all these things, nobody should be allowed to exercise options while you're sitting on the board. Oh, I'll go even further here. No CEOs, no ex-CEOs from any publicly traded company should sit on any board. This has been something I have talked about. I've been screaming and yelling about since the 1990s. I don't know if you remember this. I know Sandy Weil. I'm trying to remember the name of the stock analyst from covered AT&T for Citigroup, if I'm not mistaken. I'm trying to remember the guy's name. I'm thinking Armstrong. I can't remember exactly. But anyway, this stock analyst is a big tech analyst. You remember back in the 1990s, these tech analysts, they were like rock stars on CNBC. Well, Sandy Weil, Michael Armstrong, he was the CEO, I'm sorry, he was the CEO of AT&T at the time, if I'm not mistaken. Well, anyway, Michael Armstrong, he sat on the board of directors of Citigroup, and he wanted Citigroup to put a buy on AT&T stock. And Sandy Weil went to the stock analyst at his company and said, hey, you want to take a look at this? And through a quid pro quo, the CEO of AT&T got the analyst kids into the really hard to get into preschool. What was it, 92nd Street Y back at the time? Yeah, that's how these incestuous relationships work. The true definition of capitalism, it's become something else entirely. And it's unfortunate. To me, capitalism is about two people doing business with one another and both walking away happy. You don't have to get over on anyone. That's important. That's important. And again, unfortunately, we've gotten away from that. Anyway, I do have to mention this as well. Again, it's part of the media, and it just every single time, and I know it's going to happen, and it just drives me berserk. It's almost as if they have it ready to go. This is how god-awful the news is, the media is. Every single time there's a sell-off or there is a run-up in the market, they have to put out an article telling you how much this person, that person over there, the next person, how much money they made or lost. Here's a story. This is CNBC. Shame on them. The nation's richest big tech executives lost a collective $25 billion after Thursday's market sell-off. Let me ask you a question. Do you think that Bezos, Musk, or Zuckerberg lost an iota of sleep? Huh? Do you think they lost any sleep at all? I mentioned when I was a kid, I lost $10. That's right. It was a ton of money to me. I put it in my back pocket. I went on a hike, and it came out. I lost $10, and that killed me. I mean, I was so upset about that. These guys didn't lose $25 billion. It's their position in their portfolio. They could care less. It doesn't matter. Again, part of the great conspiracy to keep people poor and stupid out there. If Jeff Bezos wanted to sell his entire position in Amazon, and let's say his position in Amazon is we'll say $500 million right now. Do you think he could just show up today and sell $500 million and get $500 million? What do you think would happen to the price of the stock? Come on, people. It's ownership, and you need to understand that. WatchdogOnWallStreet.com, WatchdogOnWallStreet.com. We'll be back.
Chris Markowski is the watchdog on Wall Street.